So, welcome back to another episode of the Financial Bites podcast. I'm your host, Chris Passmore, and I am your social media CPA. Well, today I'm really excited to talk about an emerging industry, and that's the cannabis industry. I've looked up a few statistics, and right now the projected annual sales of cannabis this year is approximately $25 billion, with expectation of that going to $100 billion in the next 5 years. Annual growth ranges from 40 to 60%. Online sales are booming, and they're projected to increase 50% year over year. And so I'd like to introduce my guest, Steve Monacelli. Steve has been practicing public accounting for over 30 years and is a nationally recognized expert in the cannabis industry. So, Steve, welcome to the Financial Bites podcast.
Chris, thank you very much. Glad to be here.
So first, tell our listeners a little bit about you, how you became an expert in this industry, and tell us a little bit about the types of clients you work with.
Excellent. Interesting, Chris. I can't tell you that I got into the space 10 years ago with a great mission to get into the space. I actually got into the space by accident. I pretty much I focus on the tax side relative to tax planning for pretty much closely held businesses before cannabis, and predominantly real estate investors and developers. So a lot of partnership taxation, a lot of tax planning for that sector. I had a client call me up 10 years ago and say, hey, we're raising about $4 million to put into a deal. It's a cannabis deal, and we want you to be the CPA and kind of help us watch over things. And I said to my client, I says, I know nothing about cannabis. This is 10 years ago, and neither did anyone else, apparently, in the CPA world. He says, that's okay. He says, we know nothing. We're taking a flyer. We'll all learn together. And so from that point on, I was in the board meetings every other month or every third month, watching this startup that was vertical. It was cultivation, manufacturing, and dispensaries. I watched this thing launch. I watched this thing expand, including all of the issues that we had just launching this thing. And we exited to a public company in about 6 years from inception. So it was really just from A to Z, all of the issues from building it to exiting and all of the issues in between. So it was pretty fortunate that I had that level of experience aside from just the CPA view of accounting and tax. So that's pretty much how I got into the space 10 years ago. And today we service over 100 clients nationally in the cannabis sector.
Wow, that first client experience had to be great, from the original investment all the way to an exit. I mean, you really got to see this thing from start to finish. So that had to be overwhelming, exciting, and just great experience to have. So you're really fortunate to get that opportunity.
It was. I think I just got lucky to the point where I was able to get that experience. And in the meantime, in the middle of all of that, we've learned to expect the unexpected as middle-aged people. So the first week the cultivation facility opened, someone actually stole the dumpster in the middle of the night, thinking that it was full of marijuana or something. So it's pretty funny when you have a bunch of employees show up expecting to see the trash dumpster and it's missing.
And someone literally stole a dumpster of trash, not a magic supply of product that they were hoping to get.
Exactly.
Oh,
So
wow.
in terms of the types of clients we service, I mean, we service everything from the startup cannabis operator to the multi-state operators, the very large operators. And cannabis is very interesting because there are a lot of facets that are needed from a tax, accounting, and financial perspective at different stages of growth. So the startups really, we do a lot of cash flow modeling for the startups, or someone planning expansions, we'll do a cash flow modeling so that they can use this in their offering document to raise capital, which is pretty important. Choice of entity and operational structure is extremely important with cannabis companies because, unless an entity has an economic purpose, what we find is, people come to us the first time and they say, hey, we're starting a cannabis company. We're going to have this company and that company. And my motto is let's keep it simple until there's an economic reason to form another entity. So we do a lot of structural planning. Obviously, tax preparation and tax planning, and particularly, I focus my energy and efforts on Section 280E. And Section 280E is pretty much, and I'll tell you about the history and some of the detail about 280E in a second, but we spend a lot of time looking at ways in which we can include costs that would otherwise be non-deductible under 280E. We try to include those costs in inventory, and so we get benefit for it. We also do a lot of inventory costing. There really is no software out there in the cannabis space. Every one of our clients, including the very large ones, are using Excel files at the end of every month to really try to do inventory costing and do it right. From the MSO perspective, Chris, the traditional financial statements is definitely needed because you've got investors and a lot of private lenders in the space that are looking for financials. Again, we do a lot of Section 280E planning at all different levels, up and down the size spectrum. Assessment of internal controls and compliance reporting. We do a lot of refinement of the operational structure as companies grow and they acquire additional states or launch in additional states. We do a lot of cost segregation study work on large cultivation projects that are being placed in service to try to expedite the depreciation in the overall experience. We do valuation services for a whole host of reasons, whether it's estate planning or investors are trying to put a value on the company. We do a lot of transaction advisory work. So we have, in the last 3 or 4 years, we've assisted with 6 exits to public companies in the cannabis space. And, ranging from fending off due diligence to dealing with working capital issues and everything associated with transaction advisory. We have a whole team based in Chicago that just does a great job with this. We've also done a lot of investor relations work and also cash reporting under IRS guidelines. And lastly, but not least, we've represented a whole host of cannabis clients through IRS audits. So that's pretty much what we do in the space and the kinds of clients that we service.
Well, there's a lot there. And that actually, based on the breadth and the diversity in services, you can say that that's a mature industry. This isn't what some people may still think of as a brand new marketplace, the Wild West. If we're talking about exits and going public to cost segregation, which means they're buying property, to investor relations, this is a sophisticated industry with sophisticated needs. That's what I'm hearing.
Chris, 5 years ago, I was at maybe 6 years ago, I was at my first MJ Biz conference in November. It's the largest conference in the space that happens in October, November every year. And 5 years ago, I realized this is not a bunch of mom and pops coming into the space with friends and family money. There is a lot of professional money coming into the space with professional management. There are real players from Wall Street to LA and to Miami coming into the space. It is not just mom and pop.
Yeah. So the one area I want to kind of talk a little bit further about is the 280E. And this might be for all of our listeners who are newer to the cannabis space, thinking about starting a business, investing in a business. So I did a little bit of research before we talked today. And if I understand it right, the general premise is in your traditional business that's not cannabis related, you have a number of expenses that you can deduct on your tax return. That could be anything from office supplies to certain travel to a number of different things. Where for cannabis companies, 280E drastically changes that. So can you talk a little bit more about that and how that's had such a significant impact on clients in the cannabis industry?
Sure. What I'd like to do is just really give you a historical perspective. So back in 1981, up until 1981, 280E did not exist. And what happened was there was a tax court case called the Edmondson case, in which the taxpayer was selling cocaine, amphetamines, and cannabis, and basically took a deduction for all of his expenses associated with trafficking in those types of drugs. And, right down to the portion of the rent for his apartment, the cost of the scale, packaging, his telephone, automobile expenses, all of the costs that you would have an ordinary and necessary deduction for in any other business. He took a deduction for this. Well, lo and behold, the tax court sides with the taxpayer, and the Treasury just went ballistic. And as a result of the Edmondson case, it led to Congress creating Section 280 capital E. And basically what it says in retaliation to the court case, what 280E does, and I will say before I want you to read the IRS code section, there are no Treasury regulations to interpret how to apply this, Chris. This is something that they've left open. And when you talk to people in the cannabis space, you'll hear a lot about various court cases, because that is the substantial authority of what we can and cannot do with regards to the cannabis space. The way in which we apply 280E has really been molded through the historical perspective of court cases. And so 280E basically says that you cannot claim a deduction or a credit to be allowed for any amounts paid or incurred during a taxable year in carrying on a trade or business if such trade or business, or the activities which comprise such trade or business, consist of trafficking in controlled substances within the meaning of Schedule 1 and 2 of the Controlled Substances Act of 1970, which is prohibited by federal law or the law of any state in which the trade or business is conducted. And so what this says, if you go to the Controlled Substances Act, unfortunately, marijuana or cannabis is listed as a Schedule 1 drug, right up there with heroin. And so essentially, it strips our ability to take ordinary and necessary deductions. However, in arriving, it's what is considered to be gross income. We can get an adjustment to the income or sales by way of cost of goods sold. So to the extent we include these expenditures in inventoriable cost, it tells me that we can actually claim a, quote, adjustment to income in arriving at taxable income. So therein lies the question. We spend a lot of our time trying to figure out what we can and cannot include in inventoriable cost.
So just thinking about it, I mean, most businesses have an office, a building, facility. So something as simple as rent. A cannabis industry company cannot get the benefit of that tax deduction where, the shop next door can't. Is that right?
Yes. However, we'll look at rent. It's one of those expenses. That's a great example, and I'm glad you brought that up. We'll look at rent and say, okay, what are we paying rent on? In cannabis, I can think of three primary types of or sub businesses. There's cultivation, there's manufacturing, and then there is dispensaries. And when you look at cultivation and manufacturing, we can make the argument that the rent associated with those activities is actually part of your inventoriable cost to create the product. And lo and behold, we can include that portion of the rent in inventoriable cost and reduce our taxable income when the inventory sells by that cost of the inventory. On the dispensary side, where the trafficking is actually occurring, that becomes problematic because that falls into the scope of 280E. That's not an inventoriable cost.
Well, I mean, to have the opportunity to capture some of that in inventory sounds really good for those eligible, but I guess it also emphasizes that you, as a business owner in this industry, really have to have the right professionals in place, because I think your traditional entrepreneur would never think to include rent in inventory. So they're losing the benefit of that tax deduction by not having the right advisor. So that really does, again, emphasize how important it is to have a team that knows the industry and how to, maximize any value that company can have through some of this nuanced ways of addressing expenses that might not be traditionally buying a product and putting it on the floor.
Yes, no question. In fact, I like to look at it like the stunt driver. The little caption at the bottom always says, "Don't try this at home."
Yeah.
And professional stunt driver at the wheel. Bottom line is, a cannabis accountant needs to have a diverse set of knowledge, not only in the court cases, but the inventory regulations. And there are a whole bunch of rules, many of which, if you poll 10 accountants in the space, you may come up with some different answers and different risk profiles. But it's really a matter of, okay, if someone's going to sign a tax return, it has to be sustainable, because chances are your audit risk is much higher in the cannabis space than it is in any other industry. And so the IRS is always looking for low-hanging fruit, and there's a lot of money to be claimed from the IRS and finding some sloppy either bookkeeping or tax returns that are prepared inappropriately. So it becomes a real problem, especially given the fact that many of these businesses in the startup phase are with cost overruns, and invariably they don't raise as much capital as they had hoped. They always have cash flow crunches until they become stabilized, if you want to call it.
Yeah. Well, I think that's an important point about this, is because, you can get lost in the fact that this is a tax deduction and not realize the day-to-day impact of that. As an operator myself, and someone who really enjoys strategically running a business, cash flow is king. And taking advantage of every tax deduction possible creates cash flow. So more cash in your pocket to run your business, invest in your company, invest in your product and your employees. So there's a real world impact of here. Minimizing the tax burden or maximizing the deduction under product creates real cash flow that could make or break a company.
Absolutely.
So,
Absolutely. Yeah. So the proper planning is very necessary with the cannabis industry.
Yeah. And we've talked about cash flow a couple times. And one question that I've heard personally a few times, and I still hear it, I heard it maybe 2 weeks ago, and I want to see if it's still true. There's this rumor that all cannabis companies can only pay for things in cash. So imagine going to any vendor and showing up with a wad of hundreds. Is that still true? Was that ever true? Was that true 10 years ago and not today?
I understand that safe banking hasn't passed, and we'll talk about that in a little bit. But every single one of our clients across America has a cash account. And, for the most part, the IRS, we've had many audits in the cannabis space, and they're all looking for some kind of internal control, as they would in any other business, to be able to reconcile income and look at deductions. Every one of our clients has a bank account. Obviously, it's not a large bank. It's a small federal savings bank, or a state chartered bank, or it's a credit union, who in any given state, you'll find a whole handful of banks willing to take cannabis deposits.
So I guess at this point, as an expert in the industry, I'd like to just talk about what changes you've seen and what changes do you think may happen in the next few years. I was doing a little bit of research before we started talking, and saw that in one form or another, 30 to 40 states have a legalized version of marijuana. That could be medical, that could be recreational, or somewhere in between. I saw the MORE Act was proposed a few months ago for possible federal legalization. So I guess talk to us a little bit about that. What changes have you seen? If you were to roll out your crystal ball and predict what the next few years might be, what do you think is going to happen? So what are the industry things that have you seen and think are coming down the pike?
Well, that's a good question, Chris. And I think if you ask 10 people servicing the cannabis space, you'll get 10 different answers. But I'll give you my perspective. Some version of the Safe Banking Act has passed the House of Representatives 6 times, and it can't seem to get traction in the Senate. And I don't know that this legislature will pass safe banking. It's interesting, because I think safe banking will probably pass before some kind of federal legalization. But when you think about the impact of what safe banking will do to the industry, the the industry relies heavily on private equity investments, and access to banking will reduce the demand for capital and certainly the expected rates of return from an investor perspective, because there'll be less capital looking to be raised to launch these. And so when you add a layer of senior debt, it's a lot less expensive than private equity. You know, the second point I'd like to make is current investors will see an increase in their returns, given that expansion capital will be less expensive than issuing a dilutive capital raise for expansion money. But you know, very few of these are actually expanding with net profits that they don't distribute to the investors. You know, funds that the other thing too is that funds that lend to the cannabis space now will be competing against senior debt lenders. So the cost of borrowing and operating these facilities will come down with safe banking. And let's not lose sight of the fact that some of the, you know, I think the statistics in Colorado, cannabis companies represent 1% of businesses in Colorado. And when you look at theft, cannabis companies represent about 10% of the theft in Colorado. So they are highly targeted for thieves. And I think for the safety of the employees in these cannabis facilities, I think it's a good argument in and of itself for safe banking.
And just to kind of boil that down for our listeners, safe banking just means more widely accepted bank services for your cannabis companies, whether that is using a larger bank than a local savings group, or getting loans like for $50,000 just for expansion purposes. Is that kind of what you mean by traditional safe banking?
So safe banking right now, since cannabis is federally illegal, the feds do not permit banks to do business with cannabis companies. And you say, well, how can that be? Every one of your clients has a bank. Well, in the let's see, I think it was in the Obama era, or it was in the Bush era. There was a provision called a Cole Memorandum that outlined certain things that banks needed to do to accept cannabis deposits. You know, a couple things is they had to, you know, clearly know their customer, and that applies to any business, but they had to know their customer. They had to make sure they got a copy of the state banking license and that it was in effect. There were a whole host of things. So when you look at a bank's ability to take deposits, the FDIC knows what's going on. This is all out in the open. They make sure that the banks actually comply with the requirements of the Cole Memorandum to take these deposits. Now, I've seen loans, secured debt on some real estate in the space, and I'm just starting to see some banks toy with the idea of giving some lines of credit. But typically, these are smaller banks than the national banks. The national banks, I don't know one that's doing deals in the cannabis space at this point. Safe banking will open that up.
I mean, this almost gets back to that discussion of 280E and how business in the cannabis industry are so, I'd say crippled, but I would say crippled. You know, you can't deduct a majority of operating expenses like the peer companies in other industries. And then you mentioned yourself about the line of credit. I mean, I think a line of credit is essential to have as a business operator, just to provide capital to be able to float any, you know, short flows in cash deposits. I mean, these are all things that a legitimate, professionally invested and run company, but in the cannabis industry, just cannot get. And so it's kind of miraculous if you think about the success and the growth in the industry as a whole, regardless of these hurdles. I mean, I can't imagine what this is going to be like when you take those hurdles away. I imagine a sprinter going down a track with 5 hurdles, racing against somebody with no hurdles. And I mean, this thing is just going to blow up when that time comes, or if that time comes.
Well, it's interesting. It changes the economics for the investors and the company, quite frankly. So it'll be interesting to see, because, you know, the small banks that do take these deposits, you know, charge high fees because they have additional compliance costs. At least that's what they claim. So the banks are in it for their pound of flesh. And, you know, I suspect there will be federal legalization at some point. Timing is anyone's guess. And, but I will say any form of legalization will probably be in the form of some kind of a states act, because the legislators voting on this bill will want to protect their own revenue stream in their various states, and to preserve the tax revenue for their constituents. So I suspect that we still will have boundaries of state lines on cannabis. But I will say, as you pointed out, there may be 40 states with some form of legalization, whether it's adult use or medical. And Pandora's box is open. The states need the money. Just for instance, New Jersey, their tax revenue was $4.6 million in the first 10 weeks of adult use sales that began on April 21st. That's very sizable. That plugs a big hole in a lot of the deficits of various states. So I think it will happen. It's a question of when. Now everyone's thinking, okay, it's going to, federal legalization. This is great. 280E's impact goes away, but make no mistake about it. The feds will get their pound of flesh in the form of an excise tax, similar to alcohol and tobacco. It's a question of converting the detrimental impact of 280E and exchanging that for some kind of an excise tax. So that's how I see it playing out. The question is, timing, and who knows whether or not the excise tax will be as big of a bite or greater than the current bite of 280E. It's anyone's guess at this point.
Oh, I see what you're saying. And that's not necessarily good news, but the overall financial effect of 280E, or the inability to deduct non-inventory costs, might be replaced by an excise tax. So at the end of the day, you're in the same place.
More or less, yes.
Okay. So then based on that, I mean, almost the more significant change is the safe banking. I mean, to me, that one may be the more impactful change that may be coming down in the future, because access to capital, competition, lower rates. Do you agree with that? Do you think maybe safe banking may be more impactful than federal legalization, because at the end of the day, people might not see a big change?
It's interesting. It depends how it all plays out, Chris, and it's anyone's guess. And the reason why I say that, in the early stages of safe banking proposals, the MORE Act had a rescheduling characterization from a Schedule 1 controlled substance to a Schedule 2. But if you look at the definition that we just reviewed in 280E, 280E still applies to a Schedule 2 drug. And so if you tack on an excise tax that was proposed in the original MORE Act, in addition to the 280E layer that we have today, it's more detrimental than what we currently have. So it really depends on how it plays out. And I think it's anyone's guess. I think eventually, when Congress is functioning like a normal Congress, I think maybe we'll have some movement.
Okay. So I do want your best tip for entrepreneurs in the cannabis industry. But before we get there, I like to always pause in the middle of a podcast, an interview, and kind of flip things around a little bit. We've talked a lot about business, and our listeners have learned about you and your expertise in the industry. I'd love for you to share one thing about you, that what I call the backside of a card, the things that you enjoy outside of work or personally. So just so our listeners can get a better sense of who you are, the things you enjoy. So could you share what's one backside of the card thing about Steve Monacelli?
It's interesting. I love fast moving things, from fast cars to skiing. Like, I'm the guy who I've got my app on to figure out how many miles an hour I can hit on the slopes. And so in a nutshell, between the need for speed and my outlet is working out every single day. And I need an hour of mental rest while I'm working out. And it really just, I call it soul food for the mind.
Yeah. So good exercise. And I have to ask, so if you're the kind of guy who tracks how fast you go, do you have a record, either, in a vehicle or on the slopes? Do you have one where you go, I hit that number?
Yeah, I think we'll reserve the right on that one.
Okay, he pleads the fifth on that one. I understand, the family might not be happy hearing that dad might have gone, a little bit too fast going down the ski slopes or something like that. So let's get to that tip. So as an expert in the industry, as someone who advises, 100+ clients, who's been working with cannabis companies for 10 years, what's one or maybe two takeaways, one things that you would say to a client or to a new business owner in the cannabis industry that they should be aware of in order for them to be successful?
I'm going to name a few because I think there are some pretty key things here. The first one is, when you're analyzing a landscape in which you're going to do business, the best landscape may not necessarily be the state that you're in, even if there's some kind of a legalization program, whether it's adult use or medical. When you look at the Adam Smith supply and demand curve, launch in a regulatory environment that's attractive to produce significant upside to the investors. And you say to yourself, all right, what's a proper framework? Well, barriers to entry is a nice thing. If you have a framework that has, or a regulatory environment that has too many licensees or insufficient legacy market enforcement, which is really the black market, it's problematic to really generating income and rates of return that are expected. And so, I've seen various states that are just not enforcing the black market. It's very hard for license holders to make sizable profits in those states. And then, in real estate, you've heard the term location, location, location. Well, in cannabis, it's management, management, management. You need good management. You need great team players to be able to produce profits. And the last is raise sufficient capital to achieve your success. And cash flow modeling is imperative, especially in light of 280E. Invariably, we see a lot of build-outs occur. People overspend, inflation, delays. And at the end of the day, we don't have a line of credit, as you just alluded to. We need to ensure that we've got enough cash flow to get us through the tax obligations that this entity will incur, whether it's in the form of making the payments directly to the feds in the state or paying the investors distributions to pay their tax. And let me tell you, if you give an investor a K-1 and you don't give them a check to pay the tax on it, you're going to have a very unhappy investor, and that's not going to be a start of a great relationship. So I would say I'm going to leave it at that for the tips, but I think those are pretty key.
Okay, so to recap, be very aware of where you want to open your business, where to start your business, and realize the effect that may have on your company. Management, and as an accountant and other financially minded person, cash flow analysis, cash planning, and maybe set a budget. Okay. Well, we really appreciate everything you've shared today. You are obviously well-versed in cannabis and in the industry, nationally recognized expert. So if any of our listeners want to reach out to you with questions, maybe they have a business and want help, how can they find you?
Yeah, that's easy. Reach out to us on witham.com/cannabis, or you can find me on LinkedIn and connect with me in that fashion.
Okay. Well, Stephen, thank you so much for being a guest today on the Financial Bites podcast.
Chris, thank you very much. Enjoy your day.